Hello everyone, welcome to my channel Karo Academy. Today we are going to discuss about the monetary policy meeting which was held between 5th to 7th February 2025. So here we are only discussing about the important topic that are relevant for your government and banking examination. So first point is the repo rate cut. First time in the 5 years RBI cuts the repo rate by 25 basis point to 6.25% from 6.5%. Why RBI cut this repo rate? Because of the inflation. The repo rate actually the bank rate. Yep. The RBI lend money to the public sector and the private sector bank according to this repo rate. So repo rate directly affect your loan interest. Like if the repo rate is low, you get the loan in the low interest rate. Done. So stance. Second point is our Reserve Bank of India has five kind of stance: accommodative, neutral, tight, calibrated tightening, and withdrawal of accommodative. Here we have the neutral stance. Neutral stance means RBI has the uh, flexible, or what we can say, keep option open for the future adjustment. GDP growth. GDP growth projected at 6.5% for FY26 and 6.4% in FY25. So if you are updated by recent report produced by World Bank and International Monetary Fund, then you can understood that according to World Bank and IMF, the India's GDP growth in the year of 25 and 26, it was actually 6.2, and some other agencies also like 5.9 or 6.1%. But our RBI is optimistic about our consumption and investment driven economy. Inflation forecasted at 4.2%. Yeah, it's a retail relief for everyone, because in the previous fiscal FY25 we have seen that 5.2% inflation in quarter of July to September. Yeah, because of the agricultural product decline of the agricultural product. So it's a big relief for everyone. So liquidity stands infused of 1.5 lakh crore open market operation of 20,000 CR announced. So what is open market operation? You know, open market operation simply refers to the buying and selling of government securities. We have basically two kind of operation. Like for buying securities it is expansionary nature, and in selling security it's contractionary nature. For buying securities, central bank buys government security and inject liquidity in the banking sector. Here it's a buying security, because Indian economy is is resilient obviously, but due to inflation and the other geopolitics factor, tariff and the other, all the total liquidity is crunched in the banking sector. So that's why RBI inject more liquidity in the banking sector. And for the contractionary OM, open market operations, central bank sales government security, absorb liquidity for the banking system, used to control inflation to reduce excess money in the system. That's not in the current point. Current is the open market operation in the buying securities, the expansionary AOM. Done. So next point is the other action, like the deferred liquidity coverage card. LCR norms by year is restricted by Kotak Mahindra Bank. Yeah, done is Kotak Mahindra Bank has some penalties by RBI. So now it's East global risks, noted geopolitical tension and trade policy uncertainty. Yeah, because of the USA and the other countries, South Asian countries, the geopolitics risks is obviously going to affect our central bank and the Indian economy. Here is a quick mnemonic for all of you. It's a one liner for remember total February 2025 monetary policy meeting. So one-liner is 1.5 lakh crore injected 20,000 crore OMO, 6.25% repo for growth, and keeping inflation at 4.2%. Yeah. So guys, before ending the video, I must say that in the current example, if inflation is high, RBI may sell government bonds to absorb money from the market. Banks buy this bond, reducing their cash for lending, then thereby decreasing money supply and cooling down. And understand that what is going on in the OMO operation, that is open market operation. Yeah, done. Thank you.